So a very important concept to this strategy is understanding the mechanics behind it and how and why it plays out on a chart. So the psychology of market participants is very, very important. The first thing that you have to be aware of is in the market, and for me personally, a lot of people always ask me like, Carmine, how do you know if buyers or sellers are in control? I look at a chart, I see it's uptrending on a shorter time frame, but maybe a higher time frame is downtrending. How do I know who is in control? For me, I'm not so focused on who is in control, although that is very important. I am more focused on who is going to be screwed and where will there be the most pain, because where there is pain, there will be gain. And if we can capitalize on other traders' pain, this is where the edge will be for the most gain or the most profits for us traders. To validate this, I like looking for traders that will be in the most pain if they are incorrect. Where are these traders stopping out at? Now, looking at a chart, a lot of traders like to stop out or place a stop loss above a high or below a low. I know these are potential areas that a lot of traders will be in the most pain. Or to validate this even further, a trader who is on the opposing side of the market, where they are buying or selling at. What is something so obvious? Well, something so obvious is traders saying, okay, if the market could break above this resistance level, I am going to look to take the market long. Not realizing that once this green line does break, there's no follow through and the market does reverse, where we can capitalize on these breakout longs or previous day shorts stopping out above the high, capitalizing on us retail traders to find this pain and capitalizing on the gain. And context is important, and location of the setup is just as important. So the market is an auction. You guys have all heard me say that. And you have to understand that if there is a ton of buying, especially at a key level of resistance or a supply zone or a very important location, yet the market fails to move higher despite all that buying, it's a good indication that the market may want to test lower prices. If there is more passive participants serving as a wall or absorbing all the orders, it's a good chance the market can reverse because the aggressive participants will be unsuccessful. And in this type of trading scenario, the aggressive participants are going to be the ones in the most pain, and the aggressive participants are going to be the ones who are stopping out or breaking out, buying or selling above or below a level. Now flip this. If the market has a ton of selling, especially at a level of support or demand, yet the market fails to move lower. We see tons of aggressive selling stepping into the market, yet it's failing to move lower. It's a good indication the market may want to bounce and reverse higher. Now, the next example I'm going to show you was also posted on my Instagram story. If you're not following my Instagram, I'll post a link in the description below to do so. Take 2 seconds right now. Click that link and follow me. It's a really good resource where I post daily trading recaps, along with things that you're just not going to hear and things you're not going to see anywhere else on the internet. You're seriously missing out if you don't follow it. Again, the link is in the description below. Definitely check it out. So let's look at the market's auction the day prior to this. We had a very strong rally and we had a resistance level of 1, 2, 3, and 4 different touches around this 44.01 level on the S&P 500 futures chart. Now, validating exactly what I said earlier, that if the market has a ton of buying and we see buyers really trying to bring the market higher, showing a ton of effort but not getting rewarded, it's a good indication that the market may want to test those lower prices. Looking at the S&P 500 the day before I'm recording this video, we had a very strong rally, and around the 10:50, 11 o'clock Eastern time, all the way to about 11:45 Eastern time, we see the market consolidate near this high and then eventually start selling off lower. Looking at the order flow to validate exactly what I'm saying, if this is new to you, this is a delta footprint chart, and each bar shows me very key information about the market's auction. I will say you can do this without using order flow, but combining order flow validates all these claims and gives better confirmation because it shows the better picture. What we're going to see on my charts here is on the left column of each bar is a delta profile. Meaning, if there is a blue bar, that shows there are more aggressive buyers at that specific price and the amount of volume that gets transacted there. And if it is a red bar, that shows there are more aggressive sellers at that price than aggressive buyers. At 10:50, 11:45, 11:50, we can see a ton of buying, aka these blue bars on this delta footprint over here, indicating the market tried to move higher, and the reaction after that was we sold off lower, indicating there are buyers at the high, which may be trapped if the market sells off. So now we understand the concepts of this. Let's talk about how to execute and how to actually enter a trade because of this. So I want to go over my pre-market plan. I post these every single day in the Discord of setups I'm watching, levels I'm looking out for, and potential trading scenarios. My scenario today on November 8th was very, very simple. A strong rally leaving trapped buyers and heavy selling inside 4405 may offer an opportunity to short a rally targeting 4387 on the S&P 500's futures chart. And what this looks like on a chart was essentially I was looking to short a rally inside of this 4405 level if the buyers can become trapped, targeting this blue line down here, which is a pre-market low at 4387. Now, the reasoning for this was the day prior, that resistance level from where those trap buyers formulated. I knew if the market were to break this high, picking up liquidity, especially inside of a supply zone, many traders would be longing the breakout. Many shorts from yesterday would be stopping out, fueling liquidity for someone who is passively selling and trapping all those buyers to pick up liquidity for a dump lower, and this trade worked out very well. Now, I want to talk about the cons of this and the negatives because I did take 2 losing trades today before 1 winning trade. But first, let's just understand this setup a little further so we can validate it with the tape. So 5 minutes into the market being open, we rally into this supply zone, and I put risk on shorts at 4405, speculating that it will break down, targeting a pre-market support level. So I was essentially risking about 2 points, 3 points to make an 11-point sell-off to the downside. So here where my cursor is, the market simply opened on the next bar, and as you can see exactly what we talked about earlier, the market rallies up and you can see positive delta near the highs, yet the market was not going anywhere, validating my claim that these guys may become trapped and the market may want to test lower prices. That is my reasoning for entering the market short. I had an 11-to-1 planned risk to reward ratio because I was simply risking 1 to 2 points to make 11 to 12 points to the downside. I eventually stopped out of this trade for break even when my analysis did not seem correct. Now the same thing occurs here. The market goes and we break this previous high over here, and I simply re-enter the market short with the same analysis, the same thoughts that these buyers are going to be trapped, speculating the market was going to sell off much lower, and I took a $2,000 loss, about 3.5 points, and my planned risk to reward on this, since I was giving it a little more breathing room with my stop loss, was over 2-to-1, and by the time I stopped out, I got a -1R. Now the same thing happens over here. The market continues to rally, continues to break the high, and I'm sitting here watching the tape, knowing that my analysis is correct. However, I may simply be mistiming the move. So again, we break the high over here. We see a ton of aggressive buying trying to bring the market up, but failing to do so. Now, here's the negative or con of this setup, which really is not a con if you are strong mentally and you have a good emotional backbone to you. So essentially, what I'm doing is I'm getting in early before the selling steps in because my risk is super small and my reward is so high. However, it is a lower probability of it working out. However, I am not against getting in without the best confirmation if my risk is super small. Why that is if I am okay with that and I'm okay with accepting a small 2-3 point loss, that means nothing to me when my one winner is 10 to 15 points in my favor. Because if you were to get in with better confirmation, once the selling steps in, a chunk of that move already has happened. And yeah, you might get a good reward for it, but your risk may be a little higher, but that also is sacrificing a higher probability if you wait for that to happen. So it's a line in the sand. It's a happy medium between both, and it really depends on the trader, their risk tolerance, and their emotional intelligence. I'll be completely honest. So small paper cuts do not mean anything. I am correct on my analysis still, but I am simply mistiming it, something that I normally do. And if you've seen my recap videos and all the trades that I take, and I do want to say something, I post every win, every loss in the Discord of no matter what setup that I take. There's nothing to hide over here. There's a lesson for every single move in the market. Not only do I learn new things, but everybody watching this could also learn new things. So I'm sitting here down 4 points. It's nothing, and it's very small compared to the reward if I am correct. And the next time the market broke this previous high, now looking at the heat map, we could see the previous high over here getting swept. Still all that aggressive buying, then the aggressive selling steps in. I take the market short at the 05s, stop loss above the high. Again, a 2-3 point stop loss is nothing for a 12-point reward to the downside. And then this thing eventually sells off, and we come into my 4394 target perfectly. Yeah, maybe in hindsight I should have kept holding because this thing eventually came down into my 87, 84 target. But I will take what the market gives me, and this is a very good indication to always follow your plan and have confidence in your system as long as your risk is managed. There's nothing that you can do. And then some other trades that I took during the week. This was yesterday on Tuesday. This was a $2,800 profit, and this was a very similar analysis. Where in the Discord, what I was watching for was a pullback into 4391, 4388, which was that key level to the downside from the day prior. And essentially, I got long at 4392 when we swept under that level. So we broke under that, anticipating and getting shorts attracted into the market for an automatic reclaim back above. This is what it looks like on the chart. We sell off, we break this level of support, we hold it, immediately reclaim, and then looking at the volume, you can see that my claim is even validated by a lot of volume, indicating a lot of traders were shorting this breakdown for it to get bought up. And when I see something like that, it's valid enough for me to put risk on targeting that area that I showed you all earlier about those trap buyers from the day prior at 44.01, because we hit that multiple times and I had a hard time getting above it. And then another trade I took on Monday, which was a $2,700 profit, had the same exact analysis. And another trade on Monday, $1,600 profit, sweeping the lows, getting bought up, playing it long, targeting a resistance level off of the tape. Now, I want to say something just to make it very clear. There's no hindsight trading here, and from the outside, it may look like that, but all the commentary and everything that I'm watching every single day and the levels before it happens, I talk about in the Discord of exactly what I'm watching, what I am doing right, and what I am doing wrong, so there's no hindsight in this. It's a very powerful strategy where your risk is small, your risk is managed, and your reward is high by capitalizing on gain where there is pain in the market. So I'm going to end it on that note. Hit that subscribe button, comment any questions, and I would appreciate a like on this video. Peace.